Hello and welcome to 5-Year Club video number 315. Organizing stuff. There's a cat in the background. Alright. Vanguard recently dropped the minimum buy-in for VTSAX from $10,000 to $3,000. VTSAX is its total market index fund. The ETF, the exchange traded fund version of that, which could be bought in smaller chunks, is called VTI. Anyway, VTSAX has slightly lower fees than VTI. I think it's like VTI is like 0.05 and VTSAX is 0.04. So it's a little bit of a better deal for the same underlying asset, the same total market index. But yeah, before you had to buy at least $10,000 worth of it. Now you can buy $3,000 worth of it. Let's look at this article from Kiplinger. Vanguard index funds fees are going even lower. By Nellie S. Huang. Like the 100 Years' War between England and France some 6 centuries ago, the fee war between fund firm giants Fidelity and Vanguard is more about ongoing skirmishes than a single conclusive battle. The latest salvo comes from Vanguard. Changes announced today by the Malvern, Pennsylvania-based fund behemoth will save money for investors via 2 steps. First, Vanguard lowered the investment minimum for its admirable share class index mutual funds, about 38 portfolios, from $10,000 to $3,000. As part of the move, investors holding the investor share class, which required a $3,000 minimum to buy shares for the first time, will be moved into the admirable shares class, which means that if you bought VTSMX or whatever, you now get the better VTSAX rate. Oh boy. Okay. Sorry about that. New buyers are being directed away from investor class shares and towards admiral class shares. That's where the savings come in. Admiral share classes cost 15% to 71% less than their investor class counterparts. Vanguard estimates existing shareholders of its investor share class index funds, some 1.5 million investors, stand to save about $71 million in annual fees based on current assets. Our unique client-owned structure enables us to consistently pass along economies of scale and lower the cost of investing for our clients, Vanguard CEO Tim Buckley says. The shift includes 3 of the biggest index funds in the country, measured by assets: Vanguard Total Stock Market Index Fund, VTSAX, Vanguard 500 Index Fund, VFIAX, and Vanguard Total Bond Index Fund, VBTLX, which together have some $1.3 trillion combined in total fund assets. Vanguard also has filed with the SEC to launch admiral share versions of 5 other index funds. Vanguard expects those shares to be available in the first quarter of 2019. Vanguard's cost-cutting comes after what looked like a game-over move from Fidelity. In an industry first, the Boston-based firm in August 2018 launched 2 index mutual funds that charge no fee at all. One of them, Fidelity Zero Total Market Index Fund, amassed $1.3 billion in assets in the first 3 months since it opened. Fidelity launched another 2 portfolios. It's in September 2018, an index fund for small and mid-size U.S. firms and a foreign stock index fund. Fund firms will no doubt continue to ballot out, but it's clear who the ultimate winner is in these fee wars investors. Yeah, I want to know what is Fidelity's, how can they stay open with Fidelity Zero Total Market Index Fund? Is it like, they try to attract people with that and they try to sell you some shit that costs money? Or what's going on under the hood? I don't know. I think I've mentioned that before because I saw it before. Anyway, that is it for video number 315. Hope you enjoyed it. Hope this motivates you to save up $3,000 and buy some VTSAX. Have a fabulous evening.